So let's get started, and I want you to introduce yourself so that our audience can get to know what you do and what you do for your profession.
You ready?
Yes.
Okay, sorry. What's up, everybody? My name is Jon Schoeller, and I am a real estate investor, entrepreneur, husband, father. I live in Charleston, West Virginia currently, and my partners and I run A&M Investments, where we take investors' money. We buy dilapidated or distressed properties, and we flip them, and we get the investor a return on the money, and the company splits it with them, and that's how we roll. We flipped over 160 houses to date. And we probably work with somewhere between 15 and 20 private investors with anywhere between $4 and $8 million at a time.
That's really great that you have already flipped more than 160 properties. But eh, let me correct me if I'm wrong. That the flipping means that you buy and sell properties. Am I right?
Correct. Yes. And now some of those properties, but a small percentage, would be wholesales where we bought it and we didn't do anything to it. We just sold it to another investor. I would say out of the 160 plus houses that we've done, maybe 20 of those have been wholesales.
Okay, yeah, that's really great. So, if we begin this podcast with some financial stuff, with some financial literacy related stuff. So, let me first ask you that what do you think about having an emergency fund? I have read tons of articles where it was mentioned that in the United States, adults do not have enough knowledge and adults do not believe to have emergency fund for them and their families as well. So, uh, even during the financial crisis like this type of COVID-19 pandemic, when they, in the worst case scenario, when they lose their job, they face financial difficulties. So what do you believe about emergency fund, and to share your opinion?
I'm a huge advocate of the emergency fund. In fact, it's step number one for me. You need to have at least $1,000 of cash available to you for emergencies like this. And really, that's not enough, but it's better than nothing. That probably won't get most families through even 1 month, but at least give you a couple weeks, buy you a couple weeks to figure something out, to come up with another game plan. So what I preach and what my wife and I preach on our More Than Money, we have a financial consulting Discord with members in it. And what we preach is get to $1,000 first is kind of like a temporary emergency fund, then pay off all huge debts that have carry more than 5 or 6% interest. We refer to those as bad debts, and then come back to that emergency fund. And what I like to see is no less than 3 months of living expenses, but as much as 6 to 8 months, depending on your job security. So if you're like in the healthcare field, you can get away with probably a month of emergency, right? Because well, you got to account for like injury and stuff like that too, right? But if we're just talking about job security, the healthcare profession, you're pretty safe. But if you're in something like the oil and gas industry or something like that, your emergency fund needs to be bigger because you don't know if you have a job next month.
All right, but I believe there are some other type of industries too which are extremely vulnerable, that you can lose your job easily. Let's say, if
Yes, I
we
just named one, but yes.
yeah, for instance, if we talk about part-time jobs, the students who work for the basis of part-time, who are studying in the United States. So even if, in this kind of difficult situation, when they lose their job, they have nothing in the earnings. So during that particular time, it becomes extremely difficult to survive for students, and I should say all the people who have no idea or who are less intelligent towards emergency fund. So if I talk about India, we believe that it is a minimum that you need to have the 6 months of coverage. So what are the you need to have all the amounts that you spend on a monthly basis. You need to multiply it with 6 so that you have already planned for the emergency fund. So this is how we believe that one can survive during the any kind of worst situation. So another thing that I would like to come over here, that as you just mentioned, that hospitalization sector, like uh, the COVID, you said that it is a safe job, especially during the time of the COVID, right? So uh, I want to ask you is that is all the expenses, the medical care or Medicare related, all the expenses are covered in the insurance, or you have to pay a lot of money for the any kind of treatment?
Yeah. So as you know, in America, we don't have the best healthcare system. In fact, it's joked about a lot among social media and other countries. Now, I mean, we're still a first world country, I guess. So our hospitals and stuff, they're fine. Our doctors are well trained and stuff, but it's extremely expensive for healthcare coverage. I think coverage for my wife and I is almost $24,000 a year, and then
All right.
that's only up to a deductible. And then if you don't hit your deductible, you're out of pocket. And then once you exceed a certain amount, you're out of pocket again. So, yeah, I mean, healthcare costs is going to be one of your biggest expenses here in America, unless you have one of those jobs that it's covered, right? Like the healthcare industry, like I mentioned.
Yes.
That's when you probably have a decent healthcare system or coverage. But if you're, especially if you're an entrepreneur or a business owner like myself, you have to get your own coverage, and it is very costly. And then not only that, but it's so convoluted and confusing. So it needs to be accounted for, and it needs to really be based on your health. Everybody's situation is going to be different. How often do you go to the hospital? Do you have medications? Do you have illnesses that run in your family that come at a certain age? All these need to be accounted for when you're doing your budgeting, and when you're making up your 3, 6, 8 month emergency fund. That all needs to be accounted for, because without your health, what do you have? So if it's, there is a good argument out there that healthcare probably should be expensive, because if you don't believe it's a right, and I'm not getting in political here, but it probably should be expensive relatively, because it's the most important thing. So it's more important than your car. So it should cost you more than your car every month. Yes and no. I can go either way with the argument, but it is definitely either way. You need to account for it if you don't have free healthcare.
All right. Yeah. So I've heard a lot about the cost that you said that the medical system in the United States is very expensive. So much so that our Indians used to come over here in India and do that treatment, and they just go back to the United States, and the expenses are still less.
You're right. Yeah, they do
So
it in Canada. They go to Mexico. Mexico is a little bit dangerous because, and I don't want to be stereotypical or ignorant here. I need to probably do more research on this. But what I've heard is when the cost gets so expensive here, they'll go to a place like Mexico where maybe the health, the inspections and stuff like that aren't up to par, and so it can become more dangerous. And maybe I'm incorrect on that, and someone could correct me if I'm wrong, but this is what I've heard. And so when you're choosing between, you got a broken arm and it's $10,000 or $15,000 to fix in the US, or you can go to Mexico and just cross the border and cost you, $600 for the trip, and then another $2,000 to get your arm fixed. You're talking about a $10,000 to $12,000 savings, which is, almost a half a year of income for some people. So
yes.
it's to them, it's worth the risk. And that's unfortunate, but it's a real problem we have here.
All right. So as you said about income, so it's just a spontaneous. I just got some spontaneous question in my mind, is that the GDP per capita in the United States is nearly $64,000. So is it really true that the average individual earns 64,000 annually in the United States, or we can say there are so many wealthy people in the United States that are there, that can be the reason that the average is really high. So what are your thoughts on
Yeah,
this?
it's skewed. It's skewed. I mean, maybe your average in a bigger city or something, but I know right here in my city, I think the average GDP for a family is about 42,000. So
Oh,
it's significantly lower than your average. So you're going to take places where like New York and California, where of course their income's higher because their cost of living is so much higher, but it really does get skewed. I think it needs to be based on average income and average living expenses
living
per
expense.
area. Yeah, because it just it really varies. I mean, honestly, $60,000 for a family would not be enough to live in downtown New York. You wouldn't make it.
Oh,
Whereas if you made 60,000 here as a family, you're probably doing okay. So that's the big difference there.
all right. So now let's move on to your favorite topic, which is real estate investment. So how do you invest in real estate? I mean, it is very basic question, but I what I mean by is that what are the things that you consider while buying any real estate property? I mean, what do you suggest that who are just purchasing, who are just going to purchase their first property?
First of all, know your market. You absolutely need to know your market. Unless you're going to invest with a third party company like people do with myself and our company, and where we do all the market research and we handle the finances. If you're looking to get hands on and invest yourself, you absolutely need to know your market, because if you don't understand comps, which is comparable sales, what other houses are selling for, like which the one you're buying and what you can get for it, you'll get yourself in a world of trouble. Then location. That's another thing. Just because the comps say one thing does not mean houses are, popular in that area. Just because one house sold there this year does not mean your house will sell, because it's not in a great part of town. And that has to do with location. And again, knowing your market. And then after that is know your numbers. You got to know your numbers. You got to understand, at least on a basic level, what ROI is, and what 20% down is, and what FHA loans are, and what a rehab loan is. You probably need to
Hmm.
read a couple books. I try to tell people not to get hung up on doing too much research, but you need to have a basic level of understanding and education, because otherwise you're flying blind, and we know what happens when you do that.
All right. That's really amazing. Another thing regarding real estate. So uh, I've read recent news that in the developed countries, especially in the United States, Canada, and the UK, the three are the top countries in which the prices of real estate are really soaring. They are like it is going really high, and there is no reason for that. And the economy is started recovering, but still I mean, if the economy is really performing well, then it can be the reason that the real estate price will start increasing more and more. But it is still a COVID-19 pandemic. The economies all over across the world are still, uh, I mean, increasing slowly and steadily. But what do you think that why the prices of the real estate are going really high, in especially in the US and Canada? You can talk about it because you are familiar with the market.
Yeah, so this is my opinion, but we're in a bubble, and that's my opinion. Okay, so do your own research. I could be wrong, but if I'm a betting man, and I'm not, but I'm an investing man, and I'm putting my money on that we're in a bubble. And so, with that being said, I think it comes from two things. I think it's rates were so low, and then you had the pandemic stopped all the foreclosures and all that, so inventory got lower. And so you combine low interest rates with low inventory, and then you have FOMO, which is humongous
Yes.
in America, which is the fear of missing out. And so your friend buys a house at 2% interest rate, and then your aunt buys a house for 2% interest rate, and you go, "Oh no, I better buy a house for 2% interest rate." And they're like, "Well, there's no houses." And so the few that are left, it's like, "Oh, well, they're asking 200,000, but if you really want it, you'll pay 220 or 240 or 260." I just watched a TikTok last night where a house in maybe it was Canada. I don't know where it was, but anyway, it was an $800,000. I
Oh
don't know
my
if it was
God.
US or Canadian asking price, and it sold for 1.3. You're getting crazy for
Oh,
me. I mean, you're
really
just
great.
if you're paying over appraisal, which is what the bank thinks it's worth. My bet is
Hmm.
that in 3 to 5 years, all of these people are going to be upside down.
Okay, so you are already predicting that the 2008 financial crisis will repeat again in
I think
nearly
it'll
two
be
to three years.
I think it'll be something. I think that the effects might be the same, but I think it'll be for a different cause. And I think it's just going to be, we got automation coming. It's a perfect storm brewing, in my opinion. A lot of our stock market's overvalued from almost every type of
Exactly,
standpoint.
yes.
You can do the math on it. There's no reason for a $2 trillion valuation on Apple. I mean, they have a lot of cash and stuff, and they're a great company, but the valuations have just gone through the roof. And it's hard right now as an investor. You don't ever want to sit on the sideline, but man, it is hard right now to actively invest, and that's why I love our market. We're in a weird market where I live. We're never going to see a bunch of appreciation. So if you bought a house for $200,000 here 10 years ago, you're lucky. Okay, pre this craziness, you're lucky that it's worth 205. all right, or 210. You might see 1% appreciation a year where we're here, but when it's a big crash, we only see 1 to 5% depreciation. So it's a weird market where you're not going to get a lot of equity in your house when you buy it over time, but you're protected amongst the big swings. Now, I say that, and we just sold a house for $10,000 over asking ourselves, which is unheard of in our particular market. So you will get appreciation when there's a bubble, because that's what
Yeah,
bubbles do.
exactly. Yes.
I'm here. This is my opinion. If it looks risky to me, I don't count on it. So I'm invested in cryptocurrency, but I think that it's here to stay, but I don't know what form, what shape, which ones stick around, which ones don't. So all the money I have invested in crypto, even if it's up 200, 300%, I don't count it towards my net worth because I haven't cashed it out yet, and it's not a viable currency yet. So if I can't use it readily and it's not mine physically, I haven't sold it, same thing with stocks, then it's not my net worth. It's technically gone until I make a move with it. And so same thing with the market. If we buy a house right now, and let's say that the ARV in a normal market is $220,000. The ARV means the after repair value, what it's worth, what we think it's worth is 220. We could realistically right now say probably more like 230, 235 because the market's crazy. We still do all of our numbers on 220. Our returns, or we tell our investor, everything's 220. And then when we finish the house, if the market is still crazy, we'll get an extra, then it's sugar on top. We'll ask the 230 or 235. But what we don't want to do, and this is what a lot of people are doing, is they're buying houses and they're jacking up the ARV because they're seeing the trend of pricing going up. But it takes 3 to 6 months to flip a house. Anything can happen. COVID could come back, right? I would hope not, but anything can happen. And not saying that it's gone completely, but it could come back in the same wave that it hit America the first time. If that happens, you're back down to where you started. And let's say that was your profit margin, you're in trouble. You're in a lot of trouble. And people are doing it. And it's unfortunate.
Yes. I totally agree with you that it is very difficult to, as you just said, you live in weird market that during the normal economic cycle you get less appreciation, but suddenly you get massive jump in the price of real estate. So yeah, right. But the last thing that I would like to ask you over here is that about cryptocurrency. As you just said that you don't consider much about real estate, you just put your money and you just believe that it is not my money. I have already planned for my other kind of investment as well. So my question is that, do you believe that one should start investing aggressively in crypto?
Aggressively, you're talking to the wrong person. I am a super conservative financially person. So I do a lot of due diligence. I do a lot of research. And then even if I'm going to gamble, it's going to be a calculated gamble. And that's what I believe I've done with crypto. So there's I just did a post on my Instagram the other day. You can find me at the Frugal Investor on there about in which step I would invest in crypto. And it was step 8. Okay. And it fell in line. If this was just crypto, if you didn't want to do real estate or anything else, because if you wanted to do real estate, it would drop crypto down to step 9 for me. And that's a little bit of bias, right? I know more about real estate. I'm what you would call a professional real estate investor now. So my opinion is going to be biased, and I understand that. But I think that even if you put it all out, right? If you did the history of returns, if you did the history of the market, I think real estate's going to be the safer investment if you buy right. If you buy right, the safest, not the highest ROI, the safest. I think crypto will kick real estate's butt if you buy the right ones, right? And it works out for you. But if you need that money and want to count on that money being there, real estate, because even if we are in a bubble right now, all right, let's use Bitcoin for a perfect example. If you bought a $60,000 house 2 months ago, the chances of it being worth $35,000 today is slim to none. That's exactly what Bitcoin did. Exactly. Okay. And you have that thing could drop down another 10 or 15 grand or come all the way back to 120. We don't know, right?
We don't know. So it is heavily volatile.
Yes. So if you want to count on your money in probably the safest odds, if you bought a house for $60,000 2 months ago and you didn't buy it near Chernobyl or something, right? The likelihood of it being worth 30 grand 2 months later is slim to none unless you completely botch that deal. Okay. it may drop $5,000. It may drop $10,000, but a swing of half the value in 2 to 3 months is not likely. And when in crypto, it happens every year.
Yes. So the punchline is that we can somehow predict the stock market and real estate market, but it is nearly impossible to predict crypto market.
That's a safe assessment, and not telling you not to invest in. I know a lot of people. I know a few people. I know a lot of people claim to have made a lot of money. I know a few people who have, because remember, you don't make anything till you sell. So all the people that made all that money in Dogecoin, if they didn't sell it, they didn't make it.
Yes. But the point is that even Instagram influencers, YouTubers, and so many other people keep telling young people that it is the right time to invest. They are getting sponsor videos, and because of this, there is a hype to invest in crypto. Even I've seen one of my friends who have no interest in Dogecoin. He invested in Dogecoin and he lost 50,000 Indian rupee.
Ooh.
Just a loss of 50%. He invested
Ouch.
100,000 and he lost 50,000 because China banned Bitcoin. The China banned cryptocurrency.
Ouch, that hurts. So yeah, stuff like that can happen. And yeah, like you were just saying, these influencers and stuff, be careful who you're watching, be careful who you're taking investing advice from. I always ask myself this: if this person is telling me to invest in something, what's in it for them? Now I hear what they're saying, what's in it for me, but what's in it for them? And if their upside's bigger than my own, then I'm going to do my own due diligence anyway. But you're never going to hear me on my Instagram saying, invest with me, give me your money, you're not going to ever hear me do that. I let the results speak for themselves. And then if you want to invest with me in my company, you'll reach out, right? I have no reason to solicit. These people are all soliciting because they're getting paid by these cryptos to solicit, or they're heavily invested in themselves and they don't want to lose money. And the more their followers buy, the more the prices go up. And so it's influencer marketing is why it's called that. And it's technically insider trading, although crypto doesn't have the same rules as stocks.
Yes. So it is like the big people like Elon Musk, Mark Cuban, Robert Kiyosaki have been investing aggressively, and they tell other institutions to also invest in Bitcoin. And when they start believing that it is a right time to exit, they exit, and people started panicking. They lose money. They have booked their profit. Elon Musk, Mark Cuban, and other financial institutions have already booked their profit, and normal people, retail investors, lose money. That's the point.
Yeah. Yeah. By the time you hear about it, it's too late. More often than not, because unless you have billions of dollars sitting around like they do now. One thing I don't understand is why Elon and Musk, Elon and Mark Cuban, and even big athletes like LeBron James, since there's no real rules on this thing yet that I'm aware of, why do they not pump it more often? Because I believe that Elon right now today, all right, correct me if you think I'm wrong, I believe that Elon right now today could take $100 million, which I'm sure he could get access to, put it in Dogecoin, and send a tweet right after he invested and double his money. I think that he could do that almost daily. I don't know why he doesn't do it more often. Maybe not to wear it out, but I feel like all of these guys with these big influence. I mean, LeBron James has like 50 million Instagram followers. All you'd have to do is say, "Hey, I'm buying Ripple. I'm in on Ripple," right? And then he doubles his money, and then he exits before he's saying, "Hey, I'm selling Ripple," and he's in and out. I don't know if there's no rule to it other than the moral aspect. Okay, I wouldn't do it. I don't understand why these bigger guys don't do it more often, honestly, because it doesn't seem like there's any penalty for it.
Yes, exactly. And my point is that I also want to know your opinion on my thoughts also, that if you want to invest, like seriously, if you are passionate about crypto market, then I recommend to invest only the Bitcoin and Ethereum, the first two, which have the highest market capitalization. And I would prefer to stay invested for at least 5 years. So
I like that.
There are chances of losing money in the short term period, but there are very low chances of losing money if I'm going to stay invested for at least 5 years. And I will only invest that particular amount which I actually don't need in my daily life.
There you go. I wouldn't. I like both of those coins. I think Bitcoin, while it's an antiquated coin, I don't think it has a lot of upside, like for its technological aspects. I think it's like your safe haven, like gold is for the US dollar, and it's the most well known and has the most money in it. And remember how many people are invested in it now and would not like to see all their money go away. So they're going to keep it afloat or fight to. And then Ethereum is from what I understand, the internet of the crypto world, and what
Exactly.
other people are basing their technology around. And so I'm invested not in Bitcoin, but in Ethereum. I felt like I missed the boat on Bitcoin 3 years ago. Boy, was I wrong. But I was not about to let that happen again on Ethereum. So I am seeing some great returns on. I'm seeing a great ROI if I were to cash out. I haven't sold a thing yet. And then I'm also invested on Ripple just because I got it so cheap. And I bought one more recently, Cardano, and that was literally a gamble. I did not research it a lot. I just saw that this was about 2 weeks ago when everything fell about 50%. And I said,
Oh,
you know what? I'm tired of watching. I've got money that I don't necessarily care if I lose it. I always care. It wouldn't affect my lifestyle. And so I threw I think it was $500,000 at Cardano. And there was one more that I'm really liking from hearing others talk about it, and their reason for liking it is VeChain. That sounds interesting to me, and about how they track food, how they use it to track food and when it expires and how long it's been on the shelf. I think that could be applicable in the real world. Now, are they the only ones doing it? Are they doing it best? Don't ask me. I like the idea of it.
all right, all right. That's really great. And just final question, and we will sum up this podcast. So the my final question is that apart from real estate and crypto markets, do you prefer to invest in mutual funds and stocks or ETF or anything?
Yes. So my wife and I, we each max out our Roth IRA here in America. Are
Okay.
you in India, by the way?
Yeah, I'm in India, but
Awesome.
I
Okay.
know about Roth
Okay.
IRA.
Gotcha. I had no idea you'd be interviewing me all the way from India. So that's incredible. My wife and I, excuse my ignorance, but I believe it's part of India. My wife and I got married in Maldives.
Okay, yeah, near
That's
near.
that
It is
that's
very
part of.
near to India.
Okay, I thought it was part of, but is it not?
No, it is not India. It is a small country near to India.
Oh, okay. Sorry about that. I for some reason we knew it was in the Indian Ocean, so I knew
Yes,
it was
yes,
close, right?
yeah,
So
yes.
anyway,
So Sri Lanka, India, and Maldives are in three parallel line. So those
oh, okay.
three different countries.
Gotcha. Okay. Well, thanks
Okay.
for educating me on that. Excuse my ignorance. So yes, I am invested. We max a Roth IRA. So in the US, it's $6,000 each that we can
Okay.
put in after tax, and then it grows tax free until retirement. I
Okay.
also have a solo Roth IRA, which allows me to put in almost $72,000 a year into Roth contributions through my company. And so we do all of those, and what we're invested on, and this is how we do it. We started uneducated in the stock market, but just educated on needing to invest. And so we did
Yes.
all mutual funds, the target date funds. Basically, you pick the day in which you retire, the date. So for us, it was like 2060. And then you put your money in there and it diversifies for you and moves for you. So we like that. But the more I got educated and stuff, the more risk I was willing to take. So we still do that as well, because I think that's smart. And what most people should do is pick a low cost index fund and run with it. I also like to gamble about 20% of my portfolio. When I say gamble, I put it in things like Apple and
Okay.
in Lowe's and companies that I use that if I had to bet, because that's what I'm doing, will be here in 15, 20, 30 years and have some substantial upside to them. But if we were to lose that 20%, the 80% that we invest in the index
Yeah.
fund still hits our number.
Exactly. So they will take care of if even if you lose your money. And as you have invested in the companies like Apple, which are extremely successful all over the world, I mean, there are very less chance that you may lose your money even after you think for 10, 15 years. So that's really amazing. I'm good to know that you have been aggressively investing in these areas, and you also teach others about mutual funds and uh, other kind of stocks and all.
I like ETFs even better now that I've learned about those, because they're even cheaper. By cheaper, we mean by the what
Expense
they charge
ratio.
you to invest them, the
Yeah.
expense ratio, what they charge you for the management, and it's extremely low through an ETF, and you can track the same exact funds as you do as a mutual or an index
Yes.
fund. So that's why I enjoy them. And then I'm also I'm heavily not heavily I'm invested a substantial investment in the marijuana industry, because
Oh.
I believe that is the future of medicine and where we're going in the United States. Every year, a few more states give in, and every year, then a few more states after that, and the government keeps getting more and more lenient, and even the conservative states are letting in. So I believe that it's going that way. But again, when I say a substantial investment, if it all went to zero, it does not affect our retirement
Exactly.
goal.
Exactly. And
And I
just
also don't
like
even smoke marijuana.
yes,
I'm not
yes.
even an advocate, I guess, for. I have nothing for it or against it. I don't believe that it really should be illegal, because if it should be, probably cigarettes should be too. But that's my own personal preference. I think the industry has a lot of upside.
It is just like you should invest in alcohol company, but it is not mandatory that you should consume alcohol, because
There you
alcohol
go.
is people will definitely going to consume alcohol for the longer period of time, and because of that you will make money, and what else you can expect from that.
Right.
So yeah, I mean, it's great to have conversation with you. Even I learned a lot about the us real estate market and flipping, and your thoughts on cryptocurrencies were really great. I appreciate. And finally, that you explained about stocks and mutual funds and how you manage your portfolio, that you said that even if you lose your money, you are really comfortable, because the other portion of your portfolio will take care, because in the worst case that you lose your money. So it's really great that you are good, you are extremely good, and you teach people about the money management and all that stuff. I will definitely put a link of your YouTube channel and your Instagram handle in the description box below, and I will also share the video on my Instagram profile also, so and my YouTube channel also, so you can access the video. So thank you so
Awesome. I
much.
appreciate it.
So thank you so much for joining, and I just want to know what are your opinions on discussing with me, and what are your opinions on having a conversation together.
Yeah, I appreciate you having me on. It was great. You were good at the interview, and they asked some great questions. And I just enjoy talking about finance in general. So I could sit on here all day yapping about real estate and crypto, what you name it. I'm pretty much interested in it. I'm even interested in the stuff that I don't know about, because I'd like to learn about it. So yeah, I appreciate you having me on. If people want to follow me in my journey, I'm on YouTube at Jon Schoeller. And then I'm on Instagram at The Frugal Investor. And then you could find me on Patreon, More Than Money, where my wife and I host lives every week teaching people about financial literacy.
All right, that's really amazing. So the final thing that I want to tell you is that even if you may think that why do I am so much excited to know about the US stock market, US real estate market, and all the things related to real estate, is because I am a freelancer on Fiverr, and I provide content regarding finances. Like I have written content regarding real estate, stock market, cryptocurrencies, and also things regarding the US specific market. So before I write about anything, I do a lot of research, and then I came to know that all these things are happen in all these things. These are the things that we need to consider about the US market, and also the books which are written by majority of the authors are based on the US, like Benjamin Graham, Robert Kiyosaki, and all these people are great, and it is good to read this kind of book. So I came to know all these things from these sources.
Awesome. Awesome. Well, that's awesome review for researching and knowing what you're getting into, and not being a fake guru, as they like to call it. So good for you. And let me know if I can help you in any way. If you put a clip together of our segment right here for an Instagram, I'll share it and let people know where they can find you, so I can hopefully help you grow your outlet as well. All right. Perfect. We're good.
Okay, yeah, that's really great.
Thank you
And
so much. I really appreciate you having me on.
yeah, thank you so much, and we will stay connected via
Absolutely.
Instagram and email, so in future we can have another this kind of conversation as well.
Sounds good. You have a good one, and let me know if I can do anything for you. Have a good one. See you.
Yeah, thank you so much.